Joe and Darren over at Urban Hillsides Real Estate with another edition of Real Estate Reality. Darren, how you doing out there?
I'm doing great, man.
Good, good. Well, look, guys, we're going to talk first about our new listing. It's in Tahunga. And then we're going to get into the question of, is the market normalizing? So we're going to look at LA market in general, and then we're going to deep dive into Northeast LA, a couple of the zips, and see really what's going on. You know, Darren, we always talk about the national story about the real estate market, that it's not really a true read. And so we're going to try to prove that today. And again, seeing if the market is normalizing all this volatility. All right, so let me go ahead and share my screen, Darren. We're going to talk about what we call mountain living in the city. Hold on. There we go. Okay. Okay, not living in the city. I will open up the beautiful images, and why don't you talk about it? Go ahead.
Absolutely. So Tahunga, like many neighborhoods, has diverse pockets, right? This one particularly feels like you're in the mountains a bit. There are flatland areas. It feels a little
Mm,
different. You are close to foothill, so you're close to commercial activity. But when you're home in this house, you feel like you're in the mountains, man. So
yeah.
it's a finished house, 3-2. The clients customized it to their desire. They lived here for a couple of years. They rented it for a few years. But it's move-in ready, in great shape, and a true getaway, man. You feel like you're outside of the city when you're in this space. And someone's going to be really lucky to live here. It's also on a small lot, so it's efficient, easy to manage, a little bit of a condo alternative, but definitely your own home and your own space.
Yeah. 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 You know, I was going to say, Darren, I went out and I walked the neighborhood. We met some more neighbors yesterday, and really tight knit group. The neighborhood is awesome. People are always looking out for each other. That was great to see. But, you know, the other observation I have is there's some great mid century lines here in this house that you could just make a couple slight moves and accentuate it even more, which I thought would be interesting. And, you know, we were just looking at the market, in particular condos, and the LA County median is 749. This is a great starter home, really great starter home.
Yeah, yeah, I agree. When
So
our
yeah,
clients bought it,
move
they were
in.
looking for a starter home, and this
Hmm.
wasn't their first choice in the area, but they ended up here because
Hmm.
it checks so many boxes, and that
Right.
may be a similar situation as to who ends up purchasing this home.
Yeah, I think you're right. Yep. All right. Well, there it is. You can go to urbanhillsides.com. You can look at the photos. There's an audio overview. There's a 3D scan to check out, and also a video. We will be there for private showings, Darren, Saturday, 2 to 5. So call us if you'd like to see it between 2 to 5. If you can't do that, certainly contact us and we'll make other arrangements. All right. So check it all out. All right. Great. There it is. Next one we're going to look at is, hold on here. Then look at the general LA market, and there. Okay. So this is LA County real estate market as of May 8th, 2025. And the quick summary here is this week, the median list price for LA County is 1,420,000, with the market action index hovering around 41. This is less than last month's market action index of 43. Inventory has held steady at or around 8,871. And here, the quick read is what they're calling the market action index. And Darren, you can see there, 0 being a full buyer's market and 100 a full seller's market. And here we are at 41. Still saying slight seller's advantage, which, again, you were talking about it. It always is to a certain point, isn't it?
Sure, they control the asset, they own it. I think it takes more than just a 50-50 balance in the market because the seller could always just say, I don't want to sell it if I can't get what I want. So there has to be a little more
Right.
desperation, which is why I think that gauge for a buyer's market kicks in at 30 on their chart.
Yeah, right there. Very. Yep. All right. And as you can see here over time, the high for this market action index was May 6th, 2022. The 90-day average at that time was definitely slanted towards sellers at 72.55. And here we are. You can see a steady decline to, again, still seller's advantage, but a little bit more balanced. We'll see. All right. So that comes from Altos Research, very well respected data research company for real estate. So thank you guys for that. All right. Let's go ahead and move on to a little bit more of our neighborhood. And this is taken from Market Snap. It's part of the MLS. And I think you'd agree with me, Darren. There is no end to all the data we can pull up as realtors. It just
For
goes
sure.
on and on and on.
I think the hardest thing is always to identify a real trend or a
Yeah.
shift in that
Yeah.
data, because you can skew the data.
All right. So let's start with active listings. Again, this is looking at 90031652639 and 41. And active listings, if we look at pink, that's Echo Park, we are at 95. Wow. So we've really picked up there. Silver Lake, 66. That green line is Silver Lake. It's kind of steady. Really the dramatic up is Echo Park. Anything there, Derek?
Well, I think if you look back to last year in 2024, there was also a dramatic up, maybe not as dramatic looking, but
Right.
these are bigger moves because of smaller volume, may or may not identify a trend. If it's equalizing
Yep.
over time, then it's fine. I don't see anything abnormal about the increases in the volume. So I think it's a normal
Yeah.
market coming into an active spring.
Okay. Let's go to closed sales. And let's see if we just look at the latest number, March 2025, closed sales 2.6, 12, and 3.9, 20. And as you said, let's look at closed sales last year, March. Let's see. Again, not huge, 12, 20, and let's see. Yeah, 7, 11, slightly up, but nothing crazy.
Yeah.
Yeah. All right.
Cool.
We're going to go now to, let's see, we're going to shift over to days on market, and we're going to look at median days on market. And in March, let's see, 15, 13, 23, 14, 10 days. That's kind of what we've been used to most of the time, huh, Darren? I don't know.
It is.
Back at February. Yeah.
I think it's a little longer on some properties and on shorter on others. We're definitely seeing a division there. Something you hear pretty consistently from us: good properties will sell faster and for more money. Maybe properties with some issues or not in as good a condition, move-in ready, might move a little slower.
Yep. Yeah. If there's anything dramatic here to see is 90031. February 2025 number, 57 days on market. So it definitely extended out there. But in 4-1, 36 days on market. But yeah, nothing too crazy. If we look back at March last year, 29, 14, 15, 2 weeks, 3 weeks. That's kind of what we're used to.
Yep.
All right. Months supply is always interesting. If we look at the latest number, March 2025, now 6 months is considered a balanced market. We see 90026 gets as close to that at 5 months. Everything else is 2, 3, 2 months. That's about it. You will see a couple times lately, we've gotten to 6 months supply in 2.6 and 3.9. This is January 2025 and November 2024. 90039 had a 6 month supply. But other than that, it's basically stayed below that, not a balanced market. Let's look at March last year. Yeah, March last year, 2, 2, 3, 3, 2 months. That's it. Okay. Let's now look at sale price. Now, the LA County median price was $1,420,000. Here we are, March 2025, and pretty much sticks to it. You see there, 90026, 1,598,000. 39, 1,694,000. 90041, 1,679,000. So slightly higher. You see Mount Washington in Class L Park, 1,476,000. But yeah, that's kind of, again, the numbers that we're used to. You will see some big swings here. That depends, again, upon some particular heroes in terms of sales.
Sure.
That might do that. Anything else, Darren, on this one?
No, I keep repeating myself. It's nothing abnormal. We're definitely
so far
in an environment with a lot of volatility for many reasons, and yet real estate's performing on a pretty predictive pattern.
Yep. All right. And then our final number we'll look at is percentage of last list price. And this is based on median. And 1% above list price, 2%, 4%, 9%. Pretty standard for us. Haven't seen any dramatic dips. And if we look back at March last year, same idea, 1% above, 6%, 13%, 3%, 5% above. So again, pretty standard for us. So we are seeing, at least for now in this picture, maybe the market has normalized. Have we gotten used to the volatility? Have interest rates looked attractive enough that we might see a little pickup coming up? I don't know. What do you think? This is all an opinion.
Well, I do think that there was a pause. Do I definitively believe that was related to the drama related to the federal government and all that filtering down? Maybe not. Maybe it was just seasonal. Maybe it was just January, February. If we would have had all that pause in May, June, it would have been easier to predict. But as we pick up here, does it just mean that the volatility is becoming more normal? I can personally say I'm still not comfortable with all of it, but it's not affecting me as much on a daily basis. I know it's still affecting a lot of people, and it will on a daily basis. So here we are. And I think real estate is what it is. Factors affecting it. Yes, rates have come down slightly, not dramatically, but down is down. So that could be a stimulating factor or a normalizing factor. Inflation actually always stabilizes prices in the long run if it's not too dramatic as well. And we're kind of in that environment. So I'll be very curious to see if it's a normal market through spring and summer. And that the broader components that we hear about every day are how much of an impact they're going to have. I don't know.
Right. Okay, guys. Well, that's it. Thanks for joining us today, and we'll see you very soon. Take care. Have a great one.
Bye.